May profits be upon you. Welcome to another weekly Forex forecast. We're going to look at the US dollar index, and I think this is the most important of all the charts, all the pairs, all the assets in the FX space. This is my indicator. All right. This is the indicator that it's the bellwether that will let me know how I'm going to move in the pound, the Aussie, the New Zealand dollar, the Canadian dollar, the yen, and the what did I say the pound already, or the euro? Excuse me, the euro as well. I'm looking to, and don't forget the Swiss franc. The U.S. dollar is the safe haven of the world. So it is the one I'm going to look at first, and uh, it even lets you know if it's going to be a risk on or risk off. In most cases, a risk on or risk off environment in relation to the equity markets, the S&P, the Nasdaq, and the uh, the Dow, and the other ones as well as like the Russells, small caps, and all. So let's get this one down now. The first thing I want to look at is the economic calendar. The economic calendar for the upcoming week is going to be busy. There's going to be some volatility in this market this week. All right. A lot of people will only trade up until Wednesday and leave Thursday and Friday because we have NFP, non-farm employment change. All right. 8:30. All of these times are Eastern Standard, by the way. So you want to be careful of this. This because the market can reverse or the potential to reverse on just that news alone. um, a lot of people will see that the day before and the day of are times where there is too much uncertainty in the market, too much volatility to be predictive, to be you know just depending solely on technical analysis. When you have big news like this, non-farm payroll or CPI or interest rates, those have the potential to reverse markets. Those have the potential to disrespect all technical analysis. Right? So you really gotta pick and choose your battles with it. Playing playing the markets during times when there are huge news announcements like that. All right. The other ones like manufacturing PMI or ADP, non-farm employment change. These are much more milder in comparison to non-farm payroll, CPI, and interest rates. All right. So keep that in mind. Okay. Um, so Monday we have manufacturing. We got JOLTS on Tuesday. We have ADP, uh, non-farm 8:15, and Fed chair speaks at 1:45 on Wednesday. So those are the events. You want to you could. My plan is to work the markets up until that point. Up till those days, and then come Thursday and Friday, I'll wait until the dust settles. That's me. All right. So what you want to notice here is that price. Uh, this is the monthly time frame. All right. Each candle's a month, and you can see how price went into this range. All right. Peaked above it, went back into it. All right. Move sideways. Peak peak below it to sweep sell side liquidity. Left that protected low alone and pushed up high, took out all of the tops, right? So uh, this is the kind of thing that I take notice with. Uh, uh, you see how price did not trade through this high. It's a very important high. A lot of buy side, sell side liquidity, buy side liquidity up here. This is sell side. Buy side liquidity up here. People with their stop losses who took shorts, right? And those are big players, and price came up, and the market makers came out and took them out of their shorts. All right, and then retrace back down. This is a raid on buy side liquidity. This is a liquidity grab. All right. And when you see price wick away from these areas, especially swing highs, important swing highs like this, you have to have in your mind that price is not finished with business down lower. All right. And when the sellers step in like this, where it takes up half of the range of this candle, you got to be inclined to trade with the sellers. All right. If price was to have closed up here, then you would trade in the direction of the buyers. You understand? That's a simplified way of looking at things. But these highs and lows are super important, and the way price breaks those highs or breaks those lows determines whether it is just a liquidity grab or a break of market structure. This is not a break of market structure. This is a liquidity grab. Okay, so uh, I am inclined to see price pull back even further in the bigger picture of things, the macro picture. If we go to the weekly, what do we see? We see price moving up, and we have a tentative close on the weekly above this that swing high, right? Does that mean anything more significant than the monthly? The higher time frames always rule and dictate to the lower time frames. That is the rule. That is the rule. Everybody knows rule. One bite, one rule. Okay, anyway, everybody knows rules. All right. So what we got to see is we created a bullish fair value gap along the way. What does that mean? Price could use this bullish fair value gap. I'd like to have a uh, bigger pointer here, uh, and more color to it. Yeah, let's make that a little bigger. All right. So what I want to see is, uh, when you see these bullish fair value gaps, price could come back into it and go higher. Now, will it go higher or will it hold? That is the biggest thing I want you to examine. All right. One of the things is one of the things is I look for confluences. Is there anything that will help strengthen, make this fair value gap more dependable? Yes, a swing point. Is there a swing point going through or intersecting or to overlap, if you will, this this bullish fair value gap? Yes, look left, right there. All right, there's a swing point in there. For some reason, all right, when price swings comes to these swing points, it represents resistance, represents resistance. All right, and if you draw a line from this low through those highs, you know, price got over that line of resistance. Sorry, price got over this line of resistance here, right? Used it as support, and then crashed through support, came back, retested it as resistance here, and then as resistance here, we traded through it powerfully, got daylight right here between the breakout point and price. You see, took out that high here, came back, and we're right back at that breakout point, all right, or this key level of resistance or support, now turn support. Okay. Will the support hold? Well, this gives me a little bit of a confluence, doesn't it? There is a swing point here. All right. We went to the ultimate swing point. Price pushed up. I think ultimately, because we took that high out, we will see a bigger pullback. Look at the distance that it had to travel to get up here. All right. That lets me know that we could go at least to the 50%, at least to the 50% of this trading range. But that's getting way ahead. All right. Why do I think it'll hold here? What's the point? Because we had such a dramatic pullback last week, and the look at the candle close. This is a very strong close past the previous weekly low. So I like to see price continue to it, at the very least, the low of this candle. All right, and then maybe we get a small doji here, and we see a bit of a pullback. It might be a white candle here. It might be a bullish candle that closes, but it's probably going to be small. All right, and you might see a series of them small. You know, start to grind up. All right, could we take out that high? We possibly could. We possibly could, but I think we're going to go somewhere around here. All right, this is where the price overtakes this weekly candle overtakes the body of this one, and right there, some will use as the order block. I like to see that price push up to this area, and we'll see what price does from there. But I have price holding at this bullish fair value gap. Technically, I'm bullish for this week coming, but it will not. I don't think we're going to see that top. Let me show you why. If we go down to the daily, all right, you can see how price pushed higher, pulled back, pushed higher to take that high out, and then we broke market structure here. All right. With a bearish break of market structure, I am bearish on the daily. All right. The daily is bearish. But what do I see? I see price has closed. We can get rid of this. I see prices close right at the midpoint of this weekly fair value gap. That is the consummate encroachment. This is a tell. This tells me a lot of stuff when you go past 50%. Because if we get a close below this 50% strong trading through, there's a good chance that this weekly fair value gap will fail. All right, we are already taking the low. So I'm looking for a pullback. All right. So we may have a bullish week, like I was mentioning earlier. All right. We may have a bullish week, a couple of small candles that take us back up higher. You see that bearish fair value gap there on the daily. All right. Yeah. So if you want to take longs here, if you want to long against with the US dollar, I would suggest, you know, keeping an eye on that area. All right, that would be where I would take my profits if I were just trading this asset, but I don't trade it as by itself. The U.S. dollar, hardly anybody I know does, but a pound USD, euro USD, you'll know that if you take price, if price turns stronger here, the pound and the pound USD, the euro USD are going to be going the opposite way. This is where I would stop. This is where I would be watching to see if price gets held there or not. All right, that's going to be a speed bump for sure. All right, so I'm looking for price to grind up to correct this move from last week. All right, in correction of that move. So maybe we see, we see the push up, pull back. We took liquidity. We have a break of market structure. I'm looking for price to pull back up into this leg, this bearish leg of structure, and find a reason to continue lower. And this would be a good reason right here. That's all I'm saying. All right. And if we get that, we might get price to go a little bit lower, maybe take this low, and then continue down lower. So I do have an overall, I think the market will correct this move, at least to the 50% area. All right, at least to the 50% of this trading range. Okay, uh, if we go down, if you, what I tend to do is, do I see anything on the lower time frames that will tell me that price will hold here? All right. One more time frame down. I already pointed out that we have these highs, and this area here is right at 105.80. 105.80 is a key level, in my opinion. If we go down to the 4 hour, you can see that this push down is lost a bit of steam. It's not as impulsive anymore. We pushed, we responded or reacted here to the weekly fair value gap. We have a holiday gap here, some spotty price action, and then price continues down. All right, this is the new monthly candle here, if I'm not mistaken. No, this is, I'm sorry, not yet. We haven't opened yet. So this is the way it ended. All right. Yeah, it formed a 4 hour bearish fair value gap. I don't give a whole lot of you know I don't have a whole lot of confidence that that will hold. All right, but we did take out this swing low here. We did react once we did take that swing low out, and here we are again at the 50% of this wick. So I have cause to think that at this weekly fair value gap, I believe at the 50% of it, I think that we have a good chance that price will hold here and bring us back up to the high, this swing high here. All right. So what we have on a bigger, on a macro level, we have price taking an external uh, uh, liquidity point. All right. We took external range liquidity and we are now at internal range liquidity. And from here, we go back to an external range liquidity. Where would that be? Well, I tell you this, at the extreme of it, if price comes back and takes out that high, it's going to be a dramatic drop to the downside. All right. And so do not miss shorting uh, against the US dollar there. All right. Do not miss that. All right. But I'm looking at, you see how this pattern is at the high, and then we see a break of market structure to the downside. Look over here. The last time it was here, we have a similar situation, don't we? Right? And then it did had a little trouble getting past that low. We dibble past it, and then we finally get a close, and it just continued down. All right. The last time we was at these highs, that's the way it played out. Now we're over here. If I can get rid of all of that, really? Okay. All right. Sometimes it's feisty. Sometimes it's just you're running into trouble. Okay, so I got this. We take the liquidity here. We took the large liquidity or external range liquidity there. We have a break of market structure here. I'm looking for price to pull back up, maybe to the opposing candle. All right. Maybe to the opposing candle. Maybe this fair value gap holds. All right. I don't have a whole lot of confidence in, but I want to see how price reacts to it. But right here is where I'm looking. All right. And this is where there was a change in the state of delivery, in my opinion. And price will probably look similar to this over here. Oh, maybe some bullishness this week, some sideways action as it grinds up. But then there's a larger fall coming, and I'm here for it. All right, which would mean the equity markets are going to probably go up, which would mean the euro, the pound, the Aussie, the New Zealand dollar going against the US dollar will probably go up once the markets, the US dollar starts to go down. I hope you enjoyed this video. It's kind of long, but you want to know what the US dollar is going to do so that you can play the other assets properly and be educated with your analysis, right? I will see you in the next video. Thank you for watching. Do not miss that like button.